Hey guys, welcome back to Stacking Stocks as we break down Tesla's fourth quarter results that came in stronger than expected on January 26th. Shares fell as much as 5% in an extended trading on that day after the automaker warned supply chain issues could persist throughout 2022, but later rebounded into slightly positive territory. Now let's find out how the company performed. So revenue rose 65% year over year in the quarter, while automotive revenue totaled $15.97 billion, up 71%, according to a statement. Energy generation and storage revenue was $688 million, which was down 8% and below the street account consensus of $815.1 million. It was the lowest revenue for that division since the first quarter of 2021. Net income at $2.32 billion was up some 760%, and Tesla said it has a 27.4% gross margin compared with a 26.6% in the previous quarter. Well, fourth quarter automotive results at Tesla appear strong. The company's nearly $16 billion in total car revenue bested both the preceding quarter's tally of $12.6 billion and its a-year-ago comp of $9.31 billion. For those of you versed in Tesla results, you'll be curious what portion of the quarter's revenues came from regulatory credits, which critics of the company have cited here as an indication that its numbers were slightly puffed up. In the fourth quarter of 2021, Tesla reported its second smallest regulatory credit haul in the last 5 quarters. Even better for the car company, Tesla's automotive gross margin didn't fall as its revenues from the category grew. The company also said that their factories have been running below capacity for several quarters as supply chain became the main limiting factor, which is likely to continue through 2022. Well, CEO Elon Musk said on the company's earnings call that he expects Tesla to remain chip limited in 2022 and that the company would introduce no new vehicle models this year as a result. He said the company would instead work on engineering and tooling to create those future vehicles. Shareholders had been waiting for progress updates on the company's long-delayed heavy-duty semi-truck and experimental Cybertruck pickup. Without a Cybertruck electric pickup truck to sell this year, Tesla risks ceding ground to Ford, which is poised for deliveries of the fully electric F-150 Lightning pickup in the first half of this year. Ford also recently said it plans to triple production of its Mustang Mach-E, which is a Tesla Model 3 and Y competitor, and it's expected to surpass 200,000 units per year by 2023. Another likely competitor is the GMC Hummer EV, first rolled out to customers in December 2021. General Motors' fully electric take on the truck is the first to incorporate the company's Ultium platform, motors, and batteries, which GM developed in-house and plans to use as a foundation for its new electric vehicles to come. Later, in response to a question about a lower-priced Tesla for mainstream consumers, Musk said that project is not currently underway. The CEO also said the company is not currently working on a $25,000 compact electric vehicle, contrary to the ambitions he announced at a Tesla Battery Day presentation in 2020. Musk alluded to ongoing supply chain issues in a tweet last November, which indicated that 2021 had been such a supply chain nightmare, and it's not over yet. Despite those challenges, Musk and Tesla had been making quite a few cars in Austin and Berlin starting in late 2021. He noted that in Texas, the company is building Model Ys with the structural battery pack and the 4680 cells, and that they'll start delivering after final certification of the vehicle, which should be fairly soon. On the other hand, Tesla's first U.S. factory in Fremont, California, achieved record production in 2021, the company noted. The company aims to expand capacity of that facility beyond 600,000 cars per year. In its shareholder deck, Tesla revealed that it had expanded its experimental driver assistance systems testing program, dubbed FSD Beta, to around 60,000 users in the U.S. Full self-driving remains one of Tesla's primary areas of focus. The company expects a software-related profit to accelerate their overall profitability, but of course, there are a couple of constraints that will come from regulators. On that note, the California DMV and federal vehicle safety regulators at the National Highway Traffic Safety Administration are both investigating Tesla's approach to testing new and unfinished driver assistance features with customers on public roads in the U.S. The California DMV is also investigating Tesla's use of the term full self-driving to describe its premium driver assistance package. Their spokesperson said the DMV shares the concern held by many other safety stakeholders about the potential for driver inattention, misunderstanding, or misuse as these systems become more prevalent. So probably this will also have an impact on how consumers and investors will react to the FSD software. So just to recap 2021, it was a breakthrough year for Tesla and for electric vehicles in general. And while the company battled, and everyone did, with supply chain challenges through the year, it managed to grow the volumes by nearly 90% last year. This level of growth didn't happen by coincidence. It was a result of ingenuity and hard work across multiple teams throughout the company. Additionally, Tesla reached the highest operating margin in the industry in the last widely reported quarter at over 14% GAAP operating margin. Lastly, thanks to $5.5 billion of GAAP net income in 2021, the accumulated profitability since the inception of the company became positive, which made it a real company at this point. Well, this is a critical milestone for Tesla. Elon Musk believes that supply chain will continue to be the fundamental limiter of output across all factories this year. So the chip shortage, while better than last year, is still an issue. And last year was difficult to predict, and hopefully this year will be smooth sailing. The CEO expects significant growth in 2022 over 2021, comfortably above 50% growth in 2022. The fundamental focus of Tesla this year is scaling output. So both last year and this year, if the company was to introduce new vehicles, the total vehicle output would decrease. This is a very important point a lot of people don't understand. So last year, Tesla spent a lot of engineering and management resources solving supply chain issues, rewriting code, changing chips, reducing the number of chips needed with chip drama central. And that was not the only supply chain issue. So there's just hundreds of things. And as a result, Tesla was able to grow almost 90% while at least almost every other manufacturer contracted last year. So that's a good result. But if Tesla had introduced, say, a new car last year, the total vehicle output would have been the same because of the chip constraints particularly. So if Tesla had actually introduced an additional product, that would have then required a bunch of attention and resources on that increased complexity of the additional product, resulting in fewer vehicles actually being delivered. And the same is true of this year. So Tesla won't be introducing new vehicle models this year. It wouldn't make any sense because they'd still be parts constrained. The company will, however, do a lot of engineering and tooling and whatnot to create those vehicles, the Cybertruck, the Semi, the Roadster, the Optimus, and be ready to bring those to production hopefully next year. That's most likely. With customers now waiting 3 years for the Semi, 2 years for the Roadster, and 1 year for the Cybertruck, diverting engineering resources to Optimus seems a distraction to its core strategy of decarbonizing transport. Moreover, other companies like Hyundai's Boston Dynamics have been focusing their entire effort on this market for years. So what have we gotten from Tesla's fourth quarter earnings report? Tesla plans to continue increasing its manufacturing capacity in order to allow for ongoing vehicle production and deliveries. The company began producing Model Y vehicles at its Gigafactory in Texas in late 2021. It's also in the process of finalizing its manufacturing permit from local authorities for the new factory it has been building in Germany. Tesla aims to achieve 50% average annual growth in vehicle deliveries over a multi-year horizon. We just have to monitor the EV giant as it rolls out its 2022 plans, which could actually get better than 2021. Let us know what you think via the comments section. Don't forget to like, share, and subscribe. Stay safe and see you next time right here on Stacking Stocks.